Hello, hello everyone. Welcome back to my channel. After a long time, I'm making a video, and there is a very big and good reason for that because I've been learning since past 6 months or more, so you can say. So after a long time, I've made a comeback, and this has been a good reason. Why? Because I've been preparing for much of the financial and financial engineering and technical side of the financial things. Okay, so it has been related to my work as well as the extra that I have pulled in myself. Okay, related to, yeah, I won't disagree that I have learned and you know do some good things, learn and upskill myself in related to what investment banking rules demand you as a career skill sets. Okay, so what I have learned about most of the portfolio management, equity research, regarding like most of the things that are covered in chartered financial analyst level 1 courses. Other than that, I have learned about financial modeling, advanced Excel, and also the data analysis and data exploratory via Python, and obviously how order execution management, and how these big institutional investors or hedge funds or private equities invest, and they do trade, especially in quant research and quant trading. So basically, what I am trying to tell is that I have learned about financial modeling, valuation analysis, data exploratory and analysis tools such as Python and R that we use in interpreting and analyzing the stock trends, stock market, historical pattern. Now, I am not very much advanced or have gone beyond that, but yeah, more or less CFA level 1 and financial modeling analysis, and a little bit of advanced Excel and Python in doing some analysis and data crunching and cleaning up. Okay, finding out the pattern behind numbers about and the return or the portfolio risk or whatever it has done. So in all of these learnings, like I've been doing this for like 3-4 months, but I'm not going to tell you in this video how to do this, what is the roadmap, and all these things are very readily available on the internet, and there are many courses for that. So basically, trading or equity investment or mutual fund investment, we all do, and we have been doing it since like all of the population or the masses. Okay, every citizen does it in form of any one or the other form, either SIP, lump sum, or you invest in equity when it is being told by your so this is not going to be an educational video. I'm trying to tell you basically how does any these big players, those who are really making money, large investment banks, private equity, or especially this quant research, or those uh, big players who make the liquidity in every market, in every stock exchanges throughout the world. Okay, not only in India but in London or New York. And okay, one more thing. Here is the context I want to get. These all are readily available in the public information. Okay, so it's not something like I'm giving it out. Something that is like I can't give out you the you know the insiders something like secret or anything like that. It's nothing like that. But once you are learning, it is going to become much more comfortable. You are going to be much more comfortable. Okay, and these are things which you can acquire by learning and doing stuff. So a little bit of trading and hedge, not hedging, trading, investing, we all do. Okay, every month or so, or whatever we find, we save from our salary and all, and we invest it. Sorry, I've got a little bit cold. So what I'm trying to tell you is that what I have learned so far till now is that there is a saying that when you are doing any derivatives trading, options, futures, whatever, you have decided and you have taken a position, and there is a very big reason that more than 90%, or I will just agree on this fact, that more than 95% of the retail traders are bound to fail. And it has nothing to do with like these big companies or investment bankings or private equity or whatever, like quant research firms, HFTs, high frequency trading firms and all, this is nothing to do with them. Okay, so what is the reason behind it? The reason is, we can call them anything. If we don't have a proper knowledge, we can call them, they are market manipulators, they are market movers. Okay, but they are nothing just beside, like they are dealers actually. Okay, so when you are understanding, there is a difference between bid and ask price. If you know, and if you know how to trade on, these are the terminologies. Okay, they are the ones who create the spread and liquidity in the market. And see how they do it. It's just a game of maybe a little bit of basic engineering or advanced engineering mathematics, and that is what is called as financial engineering in the any throughout financial world. Majority uh, in the inner circle of the financial institutions, major financial institutions. It's just that they have more information and they are ready to build some logic algorithms, very hard algorithms, okay, very complex too, and now with the emergence of AI and all. And based on that, they have built so many of ML models, like 300 million parameters, out of which they decide which stocks are going to be in the next trend, or in the which to short, which to buy, which to sell. There are particularly now only two major terminals, or we can say the trading dashboard, that is being provided to any big players. Okay, big players, I mean, this is like investment or business consultancy companies. Okay, sorry, not business consultancy, sorry, investment, insurance, asset management company, HFTs, private equity, things like that. Okay, the first product is, already you have heard, Bloomberg Terminal. The second is LSEG Workspace. Now these are the base products. Okay, and yeah, obviously these are this will cost you like north of 25-30K US dollars per annum. And one more thing, it is not going to be given to you, me, or anyone else. Okay, even I don't have as an employee. Okay, so who is it being given to? It's a B2B product. Okay, B2B means like business to business only. With the, you need to prove that you are a reputable financial institution. Moreover, you need to have a certain amount of threshold that you are managing this much funds, and this goes in billions of dollars. Okay, or either like it is given to some of the students also as a research or as a faculty, only for the reputable institutes, not like any other institute. Okay, if you are in maybe Ivy Leagues, IITs, some a little bit triple ITs and all, so even in that, if you are taking for academic purposes, much of the features are going to be cut down. Okay, now if you have got the license for these products, can you make money? No, seriously. Why am I saying it? Because there are very bright and big minds over these who have made some extravagant complex algorithms behind it by crunching numbers. And how do you crunch numbers? By analyzing. And the most in demand skills right now, it is what? It is data science, machine learning, and deep learning. That is mostly AI. Okay, the more and more you use the systems, the more and more you understand coding and all, and the more and more you deal with the complexity of the historical price pattern, historical growth, or you can simulate the whole environment. Like you might have heard, like for an example, as an analogy I will give you, how do we predict weather condition or weather future weather of any particular city or state or a country, based on the historical climate pattern of the last 25, 30 years, 50 years, right? So this is just like the same. So in this, I have been an electrical engineer. So who have been an engineer, they might have used about MATLAB, Simulink, some these type of softwares which are readily available to simulate a particular mathematical models. Okay, so that it can predict, and it is not going to be accurate, okay, so that it can predict, a level of similarity in the future trends. So just like that, historical prices of the stocks, equities, and not only these, for trading also, like there are many other financial instruments, bonds, credit swaps, and currencies swaps and all, like credit arbitrage and everything, like how do banks operate in the international forums, between the inter countries or inter continental things like this. Okay, these are very complex, even I don't know much of this. As a basic element I will tell only is that, so Bloomberg terminal or LSEG workspace, the terminal is so advanced that you can readily integrate it with your Python, your coding environment, or whatever you're building on top of that, you know so API. So there is a very good question, why do people pay this much money to these people, not to these, for these softwares? And we have, like in India we have Money Control Pro, okay, TradingView, Screener, and all these. What is the basic difference between this place and this? So one of the basic differences, the minute level of data, the low latency data of the tick history. Tick means you have a microsecond data of fluctuation. Second is the complete order details that you see in these terminals. Okay, what I mean by the complete details of the orders? It's not like I am purchasing, let's say suppose I have purchased 10 shares of Reliance today, so not like that, okay. That is not going to do anything for any retail traders. They are not, it is not going to do anything in the Reliance shares. So let's suppose I am any company, okay, and I have I have done a block deal. The moment you place a block deal, your order is going to be sent to the stock exchange, and those order will get a message inside your terminal that someone has bought or shorted this stock or this portfolio or anything. So live in messenger data, and thousands, not thousands, millions of other news parameters that are going on globally to let you make decisions. One more thing, let's suppose I have seen in Money Control Pro or TradingView or in any, if you are not going to into the stock exchanges or in any part of this website platform, most we are going to see is 3 years, 4 years, 5 years later. Now, if anyone from finance is, more advanced, then they can download historical annual reports of any company, and you can go and research it through it, make a financial model via whatever you do, gap and equity research, historical price, trend, risk analysis, and financial reporting analysis, whatever, in Excel or in Python, whatever you do. But these are not readily available in any of the publicly available platform. But that is the difference where it goes. These type of data, now you can go beyond 20 years, and you can get, if the company is still there beyond 20 years, like many companies are, you can get historical tick price data of that. And when you apply those algorithms and make things right, and you back test it, and I have already told you as a note or as a precaution, even I am not skilled that much, but what I have seen and understood, that when you are applying a mathematical approach to anything, or a good reasoning approach combined with your programming or coding skills, there is a very little chance that you are going to fail, or you are going to get defeated or anything. So that's what makes what now, as a conclusion, I will tell you, these trends or whatever we are seeing in front of the any demat account we have opened, and we are seeing stock markets going up and down, and we say that there are less than 10% of the retail traders who are making money in the stock market. Okay, so that is the reason why, because they are actually the movers. They are beating you because they have very much high advanced mathematical bots, chatbots, AIs being built to defeat you. And those who are winning, okay, those who are winning they are just in that momentum in which they have created already. Okay, it's nothing to do like, you know, that you have like many social media influencer YouTubers will come and say like, yeah, I have done this, I have done that. Okay, 6 years I've been on loss, now I have started making money. No, 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 no. It's all a game of probability. It's never going to happen that every time you are going to win, and every trader has a different strategy. It totally depends on you, what strategy do you use. So that is the thing. Any retail traders, those who are winning, mostly less than 1% are truly winning. Okay, those who have analyzed and they have been able to mathematically derive their formula, test it, and apply it on the live uh, trading platforms. Otherwise, there is no chance that you can win. Okay, and it's not about chance that you can win or not. It's basically elementary mathematics. Okay, nothing else. Statistics and probability. That's what you have to take care. What I have realized that there is also one very big reason. You see, any firms you take, big asset management company, high frequency trading companies, or whatever company like asset management or big banks, investment banks, they particularly hire more engineers than any finance professionals. There is a very big reason for that, and you will see that these people from even IITs, top 20 to 40 rank holders, they will get huge surplus of money. Okay, maybe like north of 2 crore, 5 crore, because they are there to develop those sequencing algorithms. Quant research, quant developer, or quant traders, something like that. Okay, their machine does the job, and they are there to make the system and integration so efficient, so best one, that they are doing now the trading job for them. Okay, so let's say I will give you an example, and they are not trading just like you and me, that we are getting from 1 rupee, 2 rupee. No, they are even placing their trades and making profits in the decimal of the currencies. So it's not the products like LSI Workspace, Bloomberg Terminal. Okay, these are not only so these are publicly available information. If you have a company or you have been hired by these firms, and like let's say you are an investment banker, so you will most probably utilize LSI Workspace with Analytics Securities package, add-on Messenger Workspace. Similarly, it goes with the Bloomberg also. Okay, Bloomberg Terminal. How do you get this data? People do not pay this much money only to get this workspace or a Bloomberg Terminal. Okay, they pay to get the best of the best data at the most lowest latency, faster than all of the people combined others globally. Okay, and they win it by placing their orders faster than any other people. Okay, I will give you an example for this. Let's say any person, okay, XYZ from Delhi, he is an investor, okay, from Delhi, and he is buying Reliance shares at 100 rupees, and he placed a bid. Bid means the maximum price that he can buy the share at 98 rupees, and now the Reliance shares are going to be at 98. Now there is a trader from okay, let's say Kolkata. There is a trader from Kolkata. He has he has been holding, or not even holding. Okay, he's a trader and he wants to short the Reliance price at 101. Okay, what happens is that now this trader wants to buy 98, and this seller wants to sell or short at 101. What will happen? Then this trader from Delhi will make a 3 rupees profit out of one share. How much shares he wants to buy depends altogether a different story. But can these liquidity firms or big capital funds make this possible? No. How? So let's say this investor from Delhi is buying at 98 rupees. Now suddenly the order management execution teams from this liquidity market providers. Now you know all these firms: Citadel, Jane Street, State Street. These are the only three firms which provide liquidity. And Jane Street was very much notorious also between 2020 to 2019 to 2024, who made a large sum of money from India, and after SEBI found out, they had to pay fines, but it was nothing. Now it has been again permitted to trade in India. Okay, it is trading all over the world. So what does it do? To fill the gap, Jane Street will fill up each and every orders between 98.01, 02, 03 up to 100.99, so that that investor from Delhi should not get profit immediately. Okay, that is the thing. So that's how they make liquidity, and they make retail traders suffer. Okay, so who gets benefited in this? Obviously Jane Street. Not now, the Jane Street or any other firms, they are not filling the orders like this. Okay, their orders are hidden, and they have millions of shares to trade between these two decimal places of any sum of currency. Okay, throughout the world or globally, they are making, maybe, I don't know, but millions in a day. Similar is the approach with other investment banking firms, asset management company, insurance companies, banks, all are like that, capital markets. It may seem like, for us people, like before I didn't learn about all these things, these are magic and these are being manipulated. And yeah, it is being manipulated. Okay, at the top someone is sitting and doing and giving the management instructions and all. But what I see is that this financial world has been constricted, okay, or concentrated in a very, very small group of people, and they are trying to extract as much as they can. There is a one very good saying also now. I didn't like this. Money makes more money in the end. Okay, that is one of the most truest thing, and it hurts me a lot. Like, if you have so much of capability, and at least what I feel, or what I feel, or should be encouraged, is that basic necessities of every common people should be made free, like education, healthcare, and a little bit of urban or rural infrastructure. That's it. And on top of that, if you're not making that, what's the use of any money? Now, if you are using, if you are an investment banker, then obviously you are going to use Bloomberg Terminal, or sorry, I don't know anything about Bloomberg, but LSEG Workspace with most probably 25,000 watch list. That these are the add-on products. Then analytics channels you package, or securities, Tora OEMS, and for hedging or options one, you buy Redis. Not this Redis is not, no sorry, this Redis is not in memory cache database. Okay, this Ready is for buy side or sell side or floating side derivatives. If you are a trader, then obviously you are going to buy a SEG workspace with add-on messenger workspace with AI MCP, whatever AI agent you are using, those are built in. Okay, one more thing, one more analysis, not analysis. When AI came out, especially Anthropic, till last year, okay, AI was so much capable that it used to give much accurate future predictions of stocks. You can invest it and you can make it money out of those trades in the short level interval, okay, within 1 week, 2 weeks, 3 weeks, or a month before expiry of your options. Can you imagine that? They cut down this usage of especially Claude, Sonnet 4.6 and Opus 4.6. I think Sonnet is still available, but Opus and this one that US banned for everyone outside of US region, one model that came, and it is surely going to have a very bad effect for those persons, those who have AI readily available, okay, at their hands to give an unfair advantage so that you can make money but others can't. So that is a very bad thing. But yeah, and it's a good thing they cut down these things. Right? Do your own analysis and use AI for your analysis and developing algorithms and making systems, integrations, ML models, everything, but not the AI for predicting price, stock price history, and other types of things. So if you are a quant trader, then you obviously need Workspace add-on messenger, Workspace with add-on messenger in Workspace with Tora OEMS, analytics securities package. Then I think LBMA, that is for commodities. If you are taking, then LBMA or ICIS, industrial natural resources information, or these type of products which you can take. And these are similar products, all available on the any of the Bloomberg or LSEC Workspace website. Okay, nothing I am telling you is like secret or anything. But yeah, if you think you, me, or any other person can go and take, these are not for us. And these are like seriously one of the most expensive products that you will ever see throughout. Like seriously. But yeah, people utilize it and they're making huge money. No brainer about that. So yeah, these were my findings, and still I haven't got hands-on experience on any of this, only except LSEC Workspace. The amount of information that is available, and like yeah, I have to study it also, like from basics. I knew a few of the things, how to do company analysis and financial management, corporate finance, how to find out the CAPM model, like capital asset pricing model, and shareholders effect, and all these things, balance sheet, 3 income statement. Okay, how to do discount cash flow and all these rubbish things. I don't even use that. AI can already do this. Okay, but yeah, like seriously, these are very good tools, and if you have a proper skill set, that's why I say, okay, data science, machine learning, and AI are really the modern skills that one can acquire, to perform or do good in his own her own life. Now, I can suggest you, I'm not myself is not doing that. I've been doing it, but not at a level that it is required right now at such a scale. Okay, so yeah, it's good, but let's see what happens in the future. So yeah, so here comes the question. Many will say that I have been doing and I am now making money, I am profitable in derivatives options. See, if you are following a good trend, risk management, good mathematical calculations, and these are not very hard and fast, basic level of statistics and probability, even at least like 12th level. 12th means Indian intermediate school level, then you can really do some pretty good small scale tradings. Okay, and don't I think you should not go beyond unexpected returns. Like one should never expect like you are going to get, you may get, I'm not saying it's impossible, but it's not very practical to view that you can get 25-30% returns on a single trade, especially in derivatives. Like at least for me, as an example, I have not seen. Even I have lost money also. As a final solution also, as me or any retail investors who are there, what we can do. Investing is still a very safe side and the best thing that a common person can do. Just like Warren Buffett had said, you do any amount of analysis, anything, hedge funds, private equity, HFTs, and these liquid market makers, dealers, okay, the risk involved in them, they are just minimizing risk. Okay, the risk involved in them is also very greater, and over the horizon of 10 years, 20 years, more or less, your investment is also going to have the same amount of return that these people have made. So always listen to the old age people like Warren Buffett, Benjamin Graham, okay, these type of people. when they are investing, when they have been continuously doing so in good stocks, okay, any trader, any good person from any of these companies, they will never ever trade on riskier stocks. They are always going to do first fundamental analysis. If the company is good, then only they are going to place their bets. So that is, 101 of basics financing. Like they will analyze each and everything: operational activity, operational expenditure, revenue, debt, uh, how much the cash flow is, inflow, outflow, what is the basic, whatever ratio, activity ratio, solvency ratio, liquidity ratio, everything. They will analyze it and they will perform according to what the actual analysis of their companies say, and then after that they will place their technical workflows and everything according to that. Okay, this has gone a bit technical. Okay, so I was just giving you at a macroscopic level, at a bigger level, what things goes on or not. And other than that, yeah, I have I am more like in a platform engineer who have worked in Salesforce also. But yeah, learning is an inevitable thing. You go on with your life and always try to learn some or the other thing. So as a common person, invest in good stocks, in mutual funds. That is always going to remain. That's what I also do. I have already do not do any of these, like whatever derivatives, trading, anything. Invest good in mutual funds, in good mutual funds, in mid cap, large cap, whatever you do. It's better to get an 8, 9, 10% than to lose it all. Okay, so that is the one thing. Every person is going to have zero risk, good returns. Okay, and that is, I think, very good also, because see, if I have to give an analogy, okay, the difference between, okay, I will give you, okay, this analogy. Okay, this came into my mind just now. These investment banks, big asset management companies, okay, like let's say for an Indian purpose only, SBI Capital Markets, ICICI Securities, HDFC Asset Management Company, or UTI or LIC, if you are investing through these people. So these firms, these financial institutions, especially banks and these big are like, countries military, you understand, battalions. And if I have to give analogy in American or European side, then you can take example of Goldman, JP Morgan, Bank of America, or BlackRock, Vanguard. These are whole, they run their mutual funds, people invest in them and they get the returns. Okay, that is the thing. So these are like whole battalions. Okay, so this is the analogy. And what do does then these firms, except Jane Street, Citadel, and what do we tell? Jane Street, Citadel, and State Street. These are liquidity market movers, okay, or market manipulators right now. These provide liquidity to the market, except these companies. Okay, any private equity, hedge funds, or HFTs too, high frequency trading firms. These are like special forces. Okay, in order to invest in them, you need to have a very high capital requirement also. Even as a retail person, you already know in India too, you need beyond 1 CR, 2 CR, and they have a lock-in period of 7 years, 10 years also. So they will do whatever. So these are like special forces. They will apply, and they will make their algorithms, they will make systems, integrations in such a way that they will trade and provide good returns, or they will go down also. No brilliance in that. So these are like special forces. But when it is a full-fledged war or something like that in front of the front, so these are the big players that decide the whole market. Big banks, investment firms, or insurance companies, or things like this. Okay, if they extract or buy something, that sends a repercussion to the whole market. Okay, not because what these special forces team are doing. Okay, they are not the big market manipulators, and they are, okay, we have still good Securities and Exchange Board takes control, who takes vigilance, so that no one goes beyond recognition or beyond anything. These are still there. There are laws which protects retail. Once you are in a public market, NSE, BSE, LSE, NYSE, NASDAQ, there are many good laws, and if you are knowledgeable, you can file a class action lawsuit against any of these companies that they have been manipulated or anything. Okay, so that's one big advantage that we as a common people can have. As a conclusion, I will just only say, like, it has been beyond any comprehension of any normal sane person. I don't know, like, maybe whoever or however intelligent or genius you are, I don't think any one person can now, in one person, forget one person, even a whole team. It's like, yeah, it's become too hard or next to impossible to understand and make profitable delivers returns and everything. But it's not impossible, but yeah, takes a good amount of skills, knowledge, experience, all things. So if you like this video, and this has been how I have spent my last 3 to 4 months or 5 months most probably, and learned a good amount of deal, and let's say whatever happens in future, I don't know. And yeah, give your suggestions, advices, comments in the comment box, and let's see, catch up on the next video. And I will try now to push regular updates through my YouTube channel and updates. Yeah, bye, take care everyone.